some people just want to find something skeptical or critical to say, but telling people that they ought to buy desirable things and take cheap money to do it and hold it forever is simply the way that you preserve generational wealth, and it's worked that way for a long, long time. It still works that way. So, I don't apologize for saying I like cheap mortgages, and I don't apologize for saying people should buy Bitcoin. Everybody can decide how much Bitcoin they want to buy versus how much land versus how much art versus how much whatever else they want to own. The other thing that Frank doesn't acknowledge, again, is 2 years ago, Bitcoin was $10,000 a coin. And since I started, gold is down 15% and Bitcoin is up 100%. So for everyone that has the time horizon more than 2 years, your choice is lose 15% of your money or double your money. And if you have a time horizon of less than 2 years, you can't reasonably think of yourself as an investor. You're just a trader or a speculator.
I mean, I guess depends the year points we're working with. I mean, I always say you can always adjust it to make your case, but I'm still going to get you in front.
If you always adjust it to be less than 2 years or less than a year, then you're always a speculator, right? If you're an investor, you're taking a 4-year time horizon or a 10-year time horizon or a 30-year time horizon. So it's much more...
And,
any advice you're giving to someone for 2 months is just trading advice, and I don't give anybody trading advice.
I can say, since 1998, the gold market has lapped the S&P. So, everyone can make their case depending on the the time horizon you're looking at. But let's step outside of gold and Bitcoin for a second. Let's get out of this bubble for a second, because I just want to get your general thoughts. Kathy Wood coming out saying we're definitely in a recession. I want to get Michael Saylor's thoughts on the U.S. economy, how you see things. Are we in a recession?
We've been in a recession since March of 2020. If you calculated or if you estimated the economy based upon real output and then you adjusted it for the strength of the currency, if the currency loses 20% of its purchasing power and the economy is flat, then you contracted the economy by 20%. So the currency's lost 40% of its purchasing power in the past 2 years. If the economy grew 5%, you're down 35%. So yeah, we're in a recession, but I'm not a macroeconomist, and I don't really care to engage in the debate about what is the definition of a recession or not. Right? It's above my pay grade.
Just curious to get your thoughts on the U.S. dollar, the strength of the U.S. dollar. Is it just, the bell at the ball, the strongest horse in the race? How do you see it? Is it going to keep marching higher or not?
The dollar is the strongest medium of exchange in the world, and so it is strengthening against other currencies, but the currencies are the weakest store of value. The foreign currencies are weak store of value assets. So foreign currencies are collapsing. Like South American currencies, African currency, Sri Lankan currency, Middle Eastern, Turkish currency, Lebanese currency, Russian, Ukrainian currencies. Russia, I guess, doing better because they're tied to commodities. But I think that you've got a basket of strong currencies to be pegged to the dollar, and they're losing 15% of their value or more a year against scarce assets. And then you've got weak currencies that are losing 15% of their value against the dollar, right? If we look, the South African Kruger rand, the Korean won, the Great British pound, the euro, they're all down 11 to 13%. Polish is down 16%, the yen's down 18% over the course of about a year. So they're collapsing against the dollar. And then the developing markets are collapsing 40% against the dollar. So do I think it'll continue? Yeah. I actually think that in a digital world, the 8 billion people want to hold the dollar. They don't want to hold a local currency. So if I could swap, name a currency in South America you want to hold other than the dollar. There isn't one. So the only thing that keeps people from swapping all their local currencies for dollars is whether they trust Tether or whether they can get access to Tether or Circle, right? Right, because UST wasn't a trustworthy dollar, right? And maybe you can't get access. But I think that there's no doubt if you're looking at your bank freezing your assets and devaluing your assets in local currency, you want to hold the US dollar as your medium of exchange. And you want a simple world, or a simple way to see the world. If you need your money in less than 4 years, you probably want to keep it in the dollar. And if you need your money in more than 4 years, if you want to hold it between 4 and 40 years, you put it in property. And the best property in the world is Bitcoin, and the best currency in the world is the dollar. And there are weaker properties, like an Airbnb or building or a stock, and they're weaker because they've got counterparty risk, and they've got tax risk and execution risk and competitive risk. And maybe they're not so portable. You can't really move a ranch out of Zimbabwe to San Francisco when you have to flee the country. So what can you move out of Africa to San Francisco when you want to flee the country, right? Bitcoin you can move, and the rest, unclear. So I think that the general macroeconomic trend, what can you say? You can say the economy doesn't work so well, right? The economy doesn't work so well. It stopped working well in February of 2020, and I think Lynn Alden tweeted a chart of Japanese tourist arrivals, where the entire Japanese tourist industry went to zero in March of 2020 and is still at zero. So it's pretty obvious some things just don't work. The economy is not going to work well. The money supply is increasing. The Inflation Reduction Bill is, $600 or $800 billion worth of spending. Everybody's going to keep spending more money. Some currencies are going to collapse completely. The government's going to collapse with them. That'll happen in the developing world. That will result in capital controls. We saw what happened in Sri Lanka. You see in Nigeria and a lot of places now it's illegal to accept dollars for payment. So you're going to have capital controls, you're going to have export controls, you're going to have import controls, you're going to have wage and price controls. That will impair the economic machine from functioning more. As that happens, governments will print more money. As they print more money, the value of the currency will fall against scarce desirable assets. You can't print more energy, and so that's why you can't print more food. So certain things will have tangible value.